Welcome everyone to Vested Interests. Back again for another stock pick of the day. It is December 20th, a Tuesday. A couple more days of this week, at least for me. And then we're on to the weekend, on to Christmas Eve and Christmas. Happy holidays for all of you out there. Christmas for me, at least. Some of you may be celebrating Kwanzaa or Hanukkah. So happy holidays to you as well. Today we are going to take a look at General Mills. It is out of the consumer staple sector, and let's jump right into the video. So as you can see here, quite a few brands from General Mills. I mean, some big names, Pillsbury, right? I'm sure you've heard of them. There's some other ones here. Let me see. Liberty, Lucky Charms. I mean, Cinnamon Toast Crunch. I mean, you can pause it and go through these, but I'm sure that you know a lot of these brands. I believe there's over 50 brands here. A lot of cereals. General Mills has a tradition. General Mills has a trailblazing history of making food with passion, pioneering many firsts, and treating the world with care. For over a century and a half, we've created and invented, served, and connected while having fun along the way, bringing good to the world since 1866. So another company that has been around for well over 100 years, survived many a downturns, right? The Great Depression, Great Recession of 2008, the housing market crash, the dot-com bubble crash. You know, they've been around, they've come out the other side. So I don't think they're going anywhere now, so long as people need flour and cereal brands. I think they're good to go. If you want to know more about them, www.generalmills.com. That's where I pulled this information. That is their homepage. Like I said, you can pause this here and you can check out some of their other brands, right? Blue Buffalo, some dog food. So not just food for humans, but also dog food as well. But let's take a look at why we are looking at them today. And we are talking about General Mills, ticker GIS, again out of the consumer staple sector. They were down 4.58% on the day, closed the day out December 20th at $83.13. They have a 52-week low of $61.67, a 52-week high $88.34. So currently at $83.13, they are definitely closer to that 52-week high. So even though they've pulled back almost 5% on the day, I would say they are still maybe overvalued or above where I would want to purchase them anyway. Average volume of 4 million. They had an 8.3 million volume today, so looks like a lot of selling, even though there wasn't a big huge drop, even though it was almost 5% down there. You can see that drop initially, recovery, and then a bit of a drop, but throughout the day definitely down overall. Market cap of 49.341 billion, a beta of 0.32, so it is less volatile than the overall market. You can see that even again with a almost 5% drop, you can see they were still relatively flat. PE ratio 17.5, not terrible, but not great either. Really, for a company like this, relatively slow grower here, I would say you'd want to be, down in the low teens, maybe even 10, 11, 12, right in that range. Earnings per share 4.75. Earnings date December 20th, so they must have had something go wrong with their earnings here. Maybe they didn't hit earnings. That may be the reason for the drop. And if they didn't hit earnings, that may be a sign for further drops to come. So might be one to throw on your watch list and see if it comes back down further. This is one that was in my portfolio. I was buying this last year. I think right now consumer staples is a bit overpriced. A lot of people jump into those sectors because they tend to do well in depressed times and recessionary times. People are going to still buy cereal and the staples, the stuff they're going to buy anyway. They'll forego consumer discretionary, like your cars, new clothes, new shoes, Foot Locker, that sort of thing is consumer discretionary, whereas General Mills is on the staple side, which means people are going to buy what they're going to buy regardless of how the economy is doing. They do have dividend yield, $2.16. They do pay out quarterly, so divide by 4. We'll see that quarterly payout here in a minute. And they do have a dividend yield of 2.48%. This one is in my children's custodial account, but I was buying them last year around the $60 range whenever they jumped up into the 70s and the 80s. I think I sold them in the low 80s, probably $81 or $82 per share, I believe. So I booked some profits in this one early in the year. Ex-dividend date, January 9th, the next one. So coming up, if you bought them now, you would get the next dividend payout. and their 1-year target estimate is $80.06. So Yahoo Finance believes that there's further downside potential here. I'm not affiliated with Yahoo Finance, just where I like to pull some information. Now let's jump over and look at stockanalysis.com. Again, still looking at General Mills. They have, of the 26 stock analysts that have looked at this, they have a hold, right? Consensus hold here, and I would agree. It's not one I would be adding to at these prices, but it would be one that I would watch and see if it continues to pull back. And they have a low estimate of $63.61. That would be a 23.46% decline. That would be closer to its 52-week low, and that is where I would like it. I'd love this back in the 60s again. Average of $80.18, and that would even be lower than where it currently sits. So they're kind of in line with where Yahoo Finance sees them headed. That would be a 3.55% decrease. And if it happened to hit their high, 94.5%, or $94.50, that would be a 13.68% increase here. So again, I would agree. This is a hold, maybe to throw on the watch list. I like General Mills as a company. I like all the brands. I think they're doing well. Let's take a look at their dividends. So they are a quarterly payer, as we saw. They do have a 43.1% payout ratio, right? So a low payout ratio, below 50%. Slow growth though, right? Only 2.94% growth. You can see that it was 51 cents per share earlier in the year in April. And then they raised it up to 54 cents in July, and it's been at 54 cents since. So low payout ratio, but also low growth. It is a company at the right price. I would like it. Again, if you could get it back towards the 60s, that would bring the dividend yield back up into 3% range as well. I believe it was 3.3 or 3.4 when I was buying it last year in the $60 range. So again, it is one I would not be adding at this price, but it is one I would definitely have on my watch list. Not telling you to buy, hold, or sell any stocks, just what I would do personally. All right. And these are quick hitters trying to find value in this market. There are a lot of stocks that are pulling back currently, so definitely look for the value where you can, and do not overpay. Just because you like a company does not necessarily mean that the stock price matches the valuations, right? So if it's overpriced, it doesn't matter how good the company is, you shouldn't be paying overpriced or over what the value of a stock could be. That's a good way to lose money in the long term. All right, well, that is it for this one. General Mills, hit that like button, hit that share button, drop a comment down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Hopefully you are on your own journey as well. Drop a comment down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and hit me down below in the comment section. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great week and happy holidays. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.